Let's get more on the action we're seeing in China with David Riedel, president and founder of Riedel Research Group. David, great to have you with us.
Thank you.
You're a big believer in the long-term China growth story, and yet right now you are cautious. What will take China out of the penalty box, in your view?
Well, I'm really cautious about these U.S.-listed Chinese names. You know, Beijing has told us for years that international investors are not allowed to invest in internet companies and telecom companies and so on and so forth. So we've created these structures, these VIEs, these U.S. listings of Cayman companies that point back to the company in China. And I just think that's a very dangerous place to be. We've been reminded by Beijing that they will crack down on some of these industries, for-profit education, now some of the data stuff that Alibaba and so on and so forth are exposed to. The China story is very strong, but U.S.-listed Chinese names is not the way to play it.
So you like domestically listed A shares. Are there equivalents of some of these VIE Cayman companies listed in the United States in the A shares market, or are you just saying that these A shares companies are better just because they can escape the regulatory headwinds?
They can't escape the regulatory headwinds, but they're not caught in this crossfire between Beijing and Washington, D.C. The other side of the coin we haven't really talked about is the risk that's coming out of Washington to some of these Chinese companies on the audit front and potential delistings and so on and so forth. The reason I advocate for the easily accessible funds that own A shares is these are mid-market companies that are focused on the domestic business. They're just below the area where Beijing would be focusing a lot of their fire. So these are high-quality ways to play regional and national growth in China among consumers as well as in businesses.
David, it's Tim. Great having you on because you know this market. And I brought up earlier, I think it's not nuanced that the Hong Kong exchange opened up A shares futures. They made the announcement on Friday, probably at the low of sentiment. What does this say about China's awareness and their want to have their markets internationally investable, and that the MSC looks at this stuff and they actually like it? Does that change your view?
It doesn't change my view. They want it to be on their terms. The problem has been that the listings that have come to New York have gotten out of their control. When Didi sort of gave them a stiff arm and went ahead with their listing in New York, that was a big red flag for Beijing. They don't like that kind of thing. They like stuff that's in their home turf, on their rules, on their grounds, in their markets. And that's where they're going to allow you to play.
How does this all shake out in terms of, sorry about that, in terms of the VIE companies? I mean, if they change their structure, David, does that make you more willing to be an investor in a JD or a Baba? I mean, I don't even know if that's possible, or if the catch is out of the bag, horse out of the barn, pick whatever metaphor you choose.
Yeah, you can't change your structure because it's illegal for foreign investors to invest in many of the fields and industries that these VIEs represent, full stop. So you cannot change it into a direct investment into something. So these things will delist in the US, they'll relist into Shanghai, and they'll be available there for people to buy on that side of the fence.
Wait, you think that these some of the largest tech companies in China will delist in the U.S. and relist in Shanghai?
I do.
Wow. Okay. David, thank you. David Riedel.
Thank you.
Riedel Research. Tim, how would that look? That seems very drastic.
Well, yeah, and will the train be leaving the station? I mean, I think if you think about Alibaba, by the way, the minute they got the local listing, it was an enormous, actually, catalyst to the stock. So local liquidity is significant in excess over where they are here. I think that would still, though, be devastating to these shares. I think also U.S. regulators have also known the point in which to push and where they've also backed off. So, look, anything can happen. David's got a very sober look at what ultimately is the bottom guardrail and the bottom line, I should say, for the Chinese government. I think these stocks stay listed. And I think for the near term, you are not going to see major Chinese companies sneak through the back door and try to list in the U.S. days before the Chinese New Year and big important events in the Communist Party. I mean, these were slaps in the face at home. These were major mistakes. And we're all paying the price.
Are you with David, Dan, in terms of the notion that these major Chinese companies would delist in the U.S. eventually?
Yeah, I have no idea, but I'll tell you this. If you look at the FXI, that's the iShares large cap, Chinese ETF, and you look at the top three holdings, and they are Alibaba, Tencent, and Meituan, and you look at their, 20-some% of the holdings, they're all listed in the Hong Kong shares, right? So I have to assume for some of those ETFs like FXI, that might be a really good thing. And maybe there's an arb there.